Money market interest rates rising, Ross, off the back of yesterday's higher than expected inflation. The RBA giving the first strong indication it will change its economic forecast when it makes an interest rate decision next Tuesday, Ross.
Yeah, it hasn't been for changing up until now. It's been adamant that really interest rates would remain very close to zero until 2023. Well, that was until today when you got the first hint that perhaps next Tuesday, Melbourne Cup Day, when the Reserve Bank meets to consider interest rates yet again, that there could be a change in its economic forecasts. Now, interestingly enough, Guy Debelle, the Deputy Governor of the Reserve Bank, giving evidence before a Senate committee today, indicated that there could be a review of the economic forecasts, and this also would be something of a litmus test to see whether the Reserve Bank will keep with its resolve of keeping interest rates as low as they are, close to zero, until 2023. So let's go to Guy Debelle today in this Senate hearing and just have a little listen to what he had to say.
So inflation is increasing, has increased, although actually yesterday inflation actually stepped down a little from where it had been previously. But, the monetary policies settings we have in place, as do other central banks around the world, are, we are looking to generate a little higher inflation than we have had over the last 5-6 years. So that, as well as generate more jobs for Australians. So those are the objectives of the setting of monetary policy, Senator. So some inflation, a little bit more inflation is welcome, a lot more inflation is not welcome.
Ross, surely the danger, though, any hint of a rate rise could spook the spending recovery. The government's relying on that.
Yeah, well, that's right. And so that's about the housing market, that's about the stock market, because you saw even today the stock market came off. A lot of those dividend paying shares really come down, because if you get an increase in interest rates, you could get a commensurate drop generally in asset values as their yields start to pick up to reflect the higher interest rates. So that's the argument. And of course, what you don't want is that suddenly spiralling out of control with, a continuous increase in interest rates if the inflation's embedded. Now, today the ANZ put out its profit, and I spoke to its chief executive about exactly that. So here's what Shane Elliott had to say.
There is no doubt there is inflation happening in the system. It's just asset price inflation. And, as I've been saying, my daughter is doing economics at high school. What's the definition of inflation? When we went to school, too much money chasing too few goods. Well, that is happening. It's just that at the moment, it's happening in the assets and housing area, and it hasn't really flowed through into sort of consumer prices, the things we fill our shopping baskets with.
And Ross, the annual profit out today for ANZ, no real ill effects from the lockdowns, is there?
No, and on the face of it, it's really good. So to give you a small hint here, the profits of the ANZ now are just 4% below where they were pre-pandemic. So the cash profit for the past year has come in up 65%, $6.2 billion. You can see the dividend here has gone from 60 cents last year to $1.42 this year. The share price today was strong also, up by 14 cents, $28.54. But there is one issue where the ANZ has a problem, and that is, despite the housing boom that's gone on, the ANZ has lost significant amount of market share, largely to the Commonwealth Bank, which has picked up market share. So in this case, something hasn't been quite right at the ANZ. Let's again go to Shane Elliott and see what he has to say about that.
There's no doubt there's a little bit of caution there. And, at ANZ, there's no doubt we've been a little bit conservative, and we can judge, and again, I'm not going to make excuses here and suggest that that was deliberate. But the reality is, post-Royal Commission, thinking about responsible lending, looking into a market where house prices have been, rising at extremely high levels, yes, we've been a bit more cautious, being very thoughtful in checking, documents, making sure we understand people's incomes, making sure we understand, everything about a customer before lending. That cost us volume. And again, I'm not saying that it was deliberate, but yes, I think it is a time to be a little bit prudent and a little bit cautious about lending.
Yeah, that's the non-deliberate way in which you lose a bit of market share, you see, Kieran. That's the way it goes. The other big story of the day was the Star annual meeting today and significant denials of some of those allegations and accusations made in the media in recent times about anti-money laundering and criminals gambling at some of its facilities in Australia.
Ross, thank you.